Hello and good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'll be taking you guys through the snapshot for today. So today we have quite a number of things to go over. We are going to first begin by reviewing what the markets are looking like at the moment. Just a recap from yesterday, we had the Bank of England rate decision. The Bank of England rate decision ideally provided some upside for some downside, initial downside for the GBPUSD pair, but we saw it actually recovering steadily to these levels of 1.25, and we shall be looking at it on the chart to see where we can expect it to go for today. Now, the other thing also that's a major highlight for today is also gold. Uh, like I indicated yesterday, gold had been in a relatively tight range, failing to take out the demand that was seated at around 2,300, a level that it has held quite strongly from last month. However, we saw that the demand overwhelmed the supply, and gold eventually broke out higher. But the other thing, of course, that I've also been mentioning is that if you check on silver, silver has also been showing signs of extreme bullish momentum, and we're now seeing that trickle into gold, presenting chances that we should see a higher price on gold. Now, before I go over to the economic calendar, I've also been reviewing some of the fundamentals and some of the major headlines that might be market movers. And we've been seeing that there is a silent escalation of tensions between Russia and Ukraine. And we've observed that with a number of headlines that are actually showing that there's currently active battle between Russia and Ukraine. So as you can see here, we have some data coming in showing us, for instance, like here it's saying Ukraine drone attack leads to brief fire at company in Kaluga region of Russia. And these headlines have actually been coming out since the start of the week. If you continue to go down through the to see more data, you'll also observe that there's actually quite some data coming in. Here we are seeing that Taiwanese China Defense Ministry reports two Chinese Air Force planes there. Now, in addition to this, we have also seen, if you check on the DXY, you'll notice that the DXY also yesterday gave up on its upside momentum, and we saw it selling a little bit. However, I don't think the decline that we have seen on the DXY would warrant any extreme buying on gold. So I still think that what we are seeing on gold has a lot to do with some sort of escalation of tensions. So we should keep observing gold and see how it does today. Now, the other important thing that we also need to see, this is the VIX, which is the fear index. Whenever we have some sort of escalation of tensions, the VIX always will reflect that with normally higher prices. However, here we have a scenario where we've not been seeing any signs of a bullish VIX, or where VIX is not showing us signs of potential upside. So I think what that means then is that gold might be moving higher on an priced event. At times it does that. Like for instance, investors will start buying into gold, expecting that there is some kind of event that's going to occur. So by the time VIX actually prices in that event, gold has already priced it in. So sometimes VIX tends to present some kind of lagging effects, and that is not something new. It happens all the time. So let's keep observing to see whether we see any hedging that's going to come in form of VIX calls that could potentially send VIX higher. Because if VIX moves higher, that will then give us a good indication that there is actually a risk event that is on the horizon, and it's likely going to be priced into the market. Now, looking at the data for today, before I get into the data for today, next week we have CPI, guys, and the CPI data is going to come out on Wednesday, the 15th of May, which is just next week on Wednesday. So I'm expecting that we are going to see traders pricing in this CPI, and we most probably are going to see the markets moving in a way that's going to reflect the expected CPI that's going to come out. So the CPI data is not yet out, the forecast data. We only have core CPI month over month, which is indicating a potential decline. So we need to get other CPI data for the other days, rather for the other data fronts, data sets, like the headline, monthly, month over month, and year over year, as well as also the core month over month and year over year. So once we get those data sets, then we shall get a good idea of what's essentially going to happen. So that's pretty much it. Now um, going into going to the MT5. Let's cross over to the MT5 and see what we can expect to come from there. Okay, so let's cross over to the MT5. Okay, so on the MT5, uh, I want us to observe price action on a couple of things. We are going to begin with, let's see a moment. We are going to begin with GBPUSD. So GBPUSD, from when we met yesterday but one, I believe, because yesterday you guys were with Rufus, so that was the 8th. Yeah, so for the 8th, we had mentioned that GBPUSD had been in a steady decline. Uh, and of course, if I'm to just change this color to a better color, okay, okay, I don't know if that's better. That's a little bit tricky for the eyes. Let me just start do this maybe. Okay, not that it makes it any better. Okay, so I'll go with this. Let me go with this. Okay, so this is not too visible. Let me see what I can do. Okay, so I'm going to remove the fill, and then I'm going to make, let me just change this and make this black. Okay, so I think you guys can see that. So this is the initial decline we had, where GBPUSD actually was unable to break that 50% fib level, and it's currently actually trading closer to the golden ratio. So now we had a slight decline on GBPUSD. Then we got a liquidity sweep that appeared yesterday after the Bank of England conference. So that liquidity sweep, you can see it on a H1 time frame, and it's at this point that GBPUSD started its uptrend. Now, this uptrend has so far given it about 70 pips, and the GDP data that came out today came out bullish for the GBPUSD. So what I'm expecting is over the course of the day, I'm expecting GBPUSD to recover and possibly come and move higher above the golden ratio level. So Friday, which is today, we should see the market at least giving GBPUSD a nice push to the upside, possibly to this level around here. Now, a lot of the fundamentals are pointing towards a higher GBPUSD. The dollar index at the moment has kind of paused on its upside momentum, and I believe that's one of the reasons that are going to allow us to see a relatively stronger GBPUSD over the course of the day and allow it to move higher potentially. Now, I don't envisage it moving lower. However, if we move lower, we need to see how it reacts around this level of 1.25, because if we see a break below our 200-day moving average, which is the red line, that's going to indicate signs of sluggishness and potential downside momentum. But since we are above the 50-day and also above the 200-day, I believe those are signs that GBPUSD is going to start moving higher, and that would indicate that we should be looking for buys. Now, crossing over to gold, let's just go over to gold. Now, gold, I want you guys to look at gold first of all on an H1 time frame. Okay, so if you recall from the previous snapshots, which I want you guys to rewatch, what we what I had mentioned to you is that gold failed to break this demand area. And this demand area, we saw it from April, okay? From April, we failed to break it. When we come to end of April, we still failed to break it, and we tried to break it on NFP, but the NFP data was actually bullish for gold, and we saw that we got a liquidity sweep that took gold higher. Now, in addition to all the different things that are presenting upside momentum for gold, I want you guys to observe the kind of price action that gold is presenting. So this is a price action that was not showing us signs of bearish momentum, but it was also not showing us signs of bullish momentum. But the fact that this demand held very nicely, and the fact that gold was unable to break below this level here, indicated to us that demand is going to kick in and possibly overwhelm supply. So at the moment, gold was able to break above its 21.8%, 61.8% fib level, which is around 2,322. And that break above was also at the same point where we had our symmetrical triangle. Okay. So the symmetrical triangle essentially tends to look a bit like this. Okay. And essentially, how you use asymmetrical triangles is that when you get a break above the top of the triangle, it's typically a sign that you should be looking for buys. Okay. So what is so critical and what was so interesting is that the price action yesterday, we did not only get a nice break above that asymmetrical triangle to give us potential buys for gold, but we also saw that gold uh, was able to breach and move above its 61.8% fib level. Now, what that means is that the break of that key level to the upside is a sign that gold is having strong upside momentum. And the next level for gold is possibly going to be 2,414, which is up here on our fib box that we have on the H1 time frame. We have already breached our 50% fib level, and gold is currently in its premium zone on the H1 time frame. So I suspect that the most gold can do could allow maybe for those that have not been able to get in, we're most likely going to get a nice pushback lower around new session, and that pushback lower is going to allow gold to propel itself even higher. That is if the momentum allows. So for now, what I can advise is you might want to set buy limit orders around the areas of 2,350, possibly around maybe 2,345, so that in case maybe gold moves lower, at least you can be able to benefit from a move that will take your trade here and move higher. Now, when you go to the 15-minute time frame for gold, I want you guys to have a look at this. On a 15-minute time frame for gold, this is essentially what happened. Yesterday, during the New York session, gold ideally had a nice retracement of about 165 pips, where when it was able to reach as high as 2,328, it sold up to 2,321. Now, this kind of retracement typically happens around New York session. So I'm expecting that the same is going to happen. And what it will do is that it will then give the latecomers a chance to get into that bullish upside momentum. It's unlikely how deep that retracement is going to be. If we get a retracement below the 50% fib level, then that could allow us to get a very, very nice entry point that could. For now, I think it's just a wait and see. I wouldn't recommend you guys to get into any trades for gold until you get some level of retracement. Yeah. I'm always someone I will always advise clients um why don't always rush and rush and like don't fight, don't force trades. Okay, don't force trades. Don't force trades. Okay, don't force trades. Awesome. Now let's cross over to the Nasdaq. So for the Nasdaq, this is what we have. uh Again, the Nasdaq has been in a steady uptrend, and I suspect trend is also likely to continue. We've been observing how it's been moving higher. We're actually able to create a double bottom that was on H1 time frame, H4 time frame. We recreated that double bottom, creating it. We then saw demand kicking in, and the Nasdaq actually at the moment is about to have a golden cross where the 50-day moving average crosses above the 200-day moving average. So this is a sign that we are most likely going to get more bullish momentum for this particular index. Now, going on the daily, let's just see how high it can go. So on the daily, the key levels for Nasdaq to get as high at are these levels here, which is around 18,300. If we get any signs of if we get any bullish momentum signs, then it's likely that the Nasdaq could move as high as there today. However, that's really going to depend on the US session. If we don't get that happening on the US session, then it's going to be very tricky for us to tell. But a uh, golden cross on the H4 time frame is actually a bullish sign, which means that we should then be looking for potential buys on a Nasdaq at the moment. So that's pretty much what we have for the Nasdaq. I also want to go to AUD/USD. So for AUD/USD, if you recall when we met on Tuesday, I had said that AUD/USD had a descending condescending wedge, and you can see that we're at the brink of breaking above that wedge. So right now, I would be looking for buys on AUD/USD, potentially at this point here, and I would want to ride a buy there for AUD/USD, at least into the demand zone upwards of this level here. Okay, so we should see at least a nice move to that level, which is a move, should be a move of roughly maybe about 50 pips, as you can see. Uh, that's what I can expect for AUD/USD. So we should see a buy. If you look at my diagram here, like I said, when the market breaks above the top of the wedge, it's a bullish sign that you should be looking for buys. Yeah, so AUD/USD, we should see a nice push to the upside and possibly a move of 50 pips to that level there today. That's pretty much it for today, guys. The opportunities are not too many, and of course, being a Friday, it's not a surprise that we will expect a bit of limited momentum. So we can expect uh, to watch and see what happens there. Awesome. Question time, guys. Time for questions. If you have any questions, I'll be happy to take them. Send in your questions, guys, and I want to hear from you guys. Good morning, Gerald. Good hi, Felix. Hi, hello, Tron. Hello, Justus. Hi, Mercy. Miss Mercy and Zazi, you're asking, what is your view? What is your view on Dow Jones? Which news affect Dow Jones and Nasdaq? Dow Jones and Nasdaq, I think, are relatively bullish. However, the upside momentum for the Dow Jones is already extremely extended. So I think now we might get some bit of a pullback happening. And we should see some signs of upside momentum. Next question. Oh, okay. Next question. Uh, what is the settings? What is the settings of your MA? The settings of IMA, I use exponential. I use the my moving averages are the 50-day moving average and the 200-day moving average. So on the chart, uh, I have two moving averages, so I'll just show them to you here. Okay. Uh, the first one is the 200-day moving average, and it's colored red. So I color it the same color as my bullish candle, and that's a 50-day. So it's just as simple as that. I keep it simple, and I usually use the moving averages to tell. I look for the crossovers. So with moving averages, whenever the shorter period moving average crosses above the 200-day moving average, it's a bullish sign. And whenever the 200-day moving average crosses above the 50-day moving average, it's normally a bearish sign. Yeah, awesome. Joseph, you're saying you used to trade Nasdaq and Dow Jones. Why are you skipping? I guess it depends, Joseph, on the trading opportunities. Usually, I focus on trading opportunities. Okay, so if I've not been covering them in previous sessions, it's likely because there are no trading opportunities in them. However, I think today I covered the Nasdaq. Yeah, I covered the Nasdaq today. I told you that there's a golden cross on the H4 time frame on a Nasdaq, which is actually a sign that you should be looking for buys on a Nasdaq. So we should potentially see a move for the Nasdaq even higher. Yeah, that's what I covered for the Nasdaq. You're most welcome, Charity. Ike Jack, how are you doing, my brother? You're saying will gold rise? Yeah. So I believe maybe you can rewatch the snapshot. It will be available on FX Spacer's YouTube. Uh, I'll have to go through what I've already covered. Just rewatch the snapshot, Jack. You will be able to get my analysis properly on gold because I covered it in detail. I said that you might want to set buy limit orders around the levels of 2,350 so that in case we get a retracement on gold, your buy limit order can be triggered for you to benefit from the move higher. I also said that yesterday during the New York session, gold had a retracement of about 165 pips. If you had a buy limit order, then you would have been able to benefit with a move higher for it. US election is going to take place in November, on the 5th of November. We shall be doing coverage for it on FX Spacer as usual. Make sure you don't miss Joseph. And I'm Team MAGA. I'm Team MAGA, Team Make America Great Again. So for me, I'm in Trump's camp. Okay, and I'm vouching for Trump. I believe the best president is always a businessman. That's my crazy belief. So I'm hoping that we see some movement, some potential moves from there. Awesome. Next question: can technical analysis come in hand with fundamentals? Yes, I believe it does. Uh, Essentially, what you do is that with technical analysis, you'll be looking for signs of bullishness, signs and confirmations that the trend is bullish. And when you look at the fundamentals, you're ideally looking for things that coincide with signs of bullish momentum. Like for instance, like for gold, like I mentioned, there has been some active military action between Russia and Ukraine. I already showed you guys the headlines. I don't know if you want me to show you the headlines again, but I believe I shared them with you. So those active military actions coincide with a bullish gold, and that's typically what happens whenever we have instances like that. Is the Fed likely to reduce the interest rate this year? Yes, it is, Joseph. The Fed is most likely to. They have already begun what they call QT taper. QT taper is quantitative tightening taper. They do that to reduce the level of quantitative tightening, and it's a precursor to a rate cut. So the rate cut is going to come in soon, most likely after we get the after we get the after we get signs, they're going to look at the data to see, is inflation coming down as they expect. Are there signs that point to a potential, a rate cut? And when they get all those signs, then they'll go ahead and they do the rate cut. So the rate cut is definitely going to happen. Awesome. Where do you get the period dividers on MT5? Period dividers, you just simply go to a moment. I don't know what screen I'm sharing. Okay, let me just go to my MT5. A moment. Period dividers, you just simply go to your MT5. You right click on your MT5 and then you go to properties. When you get to properties, you go to period separators, and you check that box. Then you click OK. So actually, I don't have period separators on my charts because they make my charts too crowded. So I can always tell where the date starts. I don't really have to have them there. But if you want them, Apollo, that's how you add them on your chart. Okay, next question. USD card. Unfortunately, Gerard, I've not prepared for USD card. If you can, my brother, I'll be able to handle that on my next snapshot. I haven't done analysis for USD card today, so I wouldn't want to give you raw information. Yeah. Which is the best website for beginner traders? Beginner traders, the best website. Which one can I vouch for? Um, you need to check out for on FX Spacer. We actually have um, yes, we have new educational videos on YouTube. Okay, from for beginners. Okay, there are two videos. They are being covered by Samson Mzera, so just check them out. They take you through the basics of trading from the start, so you can watch those videos, and they are beginner friendly, so you can always check them out. Just check the link in the bio, or on FX Spacer's YouTube. You see the two videos there. They are purely for beginners. Awesome. Guys, I think that's pretty much it. DXY is available on MT5 as a futures, okay? As a futures product. So you can look for it, I think, in the symbols. You just have to search for it. Let me see. Somewhere here. Okay, where is it? Where is it? Where is it? Okay, can you guys see my screen? Just want to hope that I'm sharing my screen. Oh, I'm not presenting anything. Oh yeah, okay, fine. So just go to your MT5. It's somewhere there. You just have to look for it. DXY, let's see. It's somewhere on the MT5. Should be somewhere here. Let's see. Wait, 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 wait. USD. Let's see. FX group. Rufus is normally the one who uses it. So I have to look for it from here. Should be somewhere. This is the VIX. Okay, so it's here. Okay, it's USD index futures. Okay, the person who asked, I don't know who asked there. Someone asked about it. Mr. Ernest Shayo. Okay, so go on your MT5 and then search for USD index M4. That's its code. Okay, this one here, that's the DXY, but it's a futures. It's a futures, so which means it has an expiry. If you want to get the actual DXY, you can always find it on on TradingView, but on MT5 FX Spacer, it's called the USD Index M4. That's its symbol. Okay. Remember that DXY in short, that's its short form, but in full, it's a USD index or the dollar index. Okay, guys, that's it. I'm seeing there are so many questions. I really wish we could continue going on, but I think that's it for today. Joseph, I think I already I answered that question. Presidential debates, again, those debate dates I wouldn't know them off head, okay? But for the election, it's on the 5th of November this year. The showdown between Republican and Democrats. That's going to be Donald Trump and Joe Biden. Yeah, that's on the 5th of November. Using your moving average, what indicates a buy and sell? Moving averages, two things. You have what is called a golden cross, where the 50-day moving average crosses above the 200-day moving average. And then you have a death cross, where the 200-day moving average crosses below the 50-day moving average. So whenever you have a golden cross, you should be looking for buys. And whenever you have a death cross, then you're looking for sells. Okay. So that is how you use the moving averages. Okay. Guys, I wish you all the best. Cheers. Unfortunately, I can't host you guys. I was going to host you guys for brunch here at my place, but I guess maybe next time. Cheers, guys. Happy trading, and I wish you guys all the best. We talk soon, guys. Cheers. Have a nice weekend.